Today's focus: long-term Bitcoin holders remain calm as SOPR stays low. Is the 92,000 consolidation period a time for quiet accumulation, or should we wait for a breakout? Exclusive interview with HKEX, no script needed, just the truth. CZ strongly supports Binance, aiming to break out of small circles. Bitcoin holds steady at a $3.14 trillion market cap. Data shows a focus on emotional resonance. It's Friday, December 5th on the Chinese channel, Where is Bitlian? I'm Dong Dong. Let's first look at the most important 24-hour data headlines in the crypto world. On-chain data now seems to quietly suggest that long-term Bitcoin holders aren't scared at all. SOPR is dropping, but they're not selling a single coin. They're holding on even more tightly than a cell phone signal. In the past 24 hours, BTC has been bouncing between $90,900 and $94,000. Around noon today, it was still obediently hovering near $92,000. But these fluctuations mean nothing to long-term players. As history has shown, as long as SOPR doesn't break below 1, it means the coins are locked up. Fewer and fewer coins are available to sell, and the market risk keeps decreasing. The tools for a rebound are also accumulating more and more. Simply put, this isn't the stage where people are scared of falling anymore, it's the stage where others have left, but I'm still quietly accumulating. Once this strength is fully built up and the next move starts, it could rise so much that everyone who gets in will be grinning from ear to ear. This time, Ethereum's big buy orders have directly brought the market sentiment back. After Fusaka got angry, the taker-buy ratio shot up from 0.9451 all the way to 1.16, surpassing taker sales. It hit a new 4-month high. The meaning is also very straightforward. Buyers are now even more aggressive than sellers. The capital has already made its stance clear. I'm going in first, you guys can follow the price if you want or not. ETH is still hovering around $3,130, but the sentiment has already turned bullish in advance. If, in the next few days, the open interest stays steadily above 1.0, then basically it's telling you that the bottom is more or less set. Next, it's heading for $3,500, and if things go well, it might even shoot straight to $4,000. To sum it up in one sentence, it's all about sentiment now, and the capital is back. The pot of water that is ETH is about to start bubbling again. The current altcoin market is in that kind of quiet state where everyone has left but the lights are still on. As for Coach Chen, he's as skinny as if he's been on a diet. And the 30-day trading volume of the stablecoin arbitrage team has also dropped back below the annual average line. This is a typical period when the big players are staying silent. It's the perfect time for you to quietly get on board. Every time the market gets this cold, it's actually when quality coins are at their cheapest and most comfortable, and the opposing side is at its weakest. If you start dollar cost averaging now, no one will be competing with you for the lowest price, and it's super stable. Once trading volume suddenly wakes up one day, altcoins never rise politely. They always rocket up. The chips you picked up at the bottom instantly become hot commodities. So, what about strategy? This period is best suited for steady dollar cost averaging, accumulating slowly and gradually increasing your position. But remember to set a stop loss condition for your strategy, something like, if things start to look off, don't get carried away. When the market heats up, make sure to take profits in stages. Don't be greedy. Simply put, now is not the time to get excited. It's the time to quietly collect chips. This is a strategic zone, not a tactical one. Those who can endure this phase will be the ones laughing the loudest in the next market rally. Like and follow for daily updates on 24/7 news in crypto, blockchain, and mining. Click the bell to join and become a member. You'll receive the wealth code every Friday. At the start of group interview in Dubai, CZ, Changpeng Zhao, seemed less involved yet active, and he seemed to be in a great mood online. He said that when he wrote his resignation letter, he actually cried. But now every day feels like he's switched his life to comfort mode. He can finally live in the moment. When asked about HKEX serving as Binance's co-CEO, he gave her extremely high praise, hardworking, resilient under pressure, and deeply understands the community. He said, if she's not a superhuman, then she must be running on some kind of cheat code. He's completely at ease handing Binance's future over to her.
In the Binance blockchain, BTV had an exclusive interview with Binance's co-CEO, HKEX. In a rare moment of relaxation, she talked about her work pace, the pressures of the industry, and the labels imposed by outsiders, saying that she never prepares to embellish anything. She just needs to speak the truth clearly. When faced with the title of the most powerful woman in the crypto world, she considers herself simply lucky, a person chosen to fulfill a mission.
Sometimes there isn't a perfect answer. I think we're all just feeling our way across the river by stepping on stones. And in this process, you realize that you're actually just part of a small circle. Everyone is pretty geeky and idealistic. As you keep moving forward, someone might say, hey, I want to be 100% decentralized. I'm an anarchist, right? But then Binance might choose a different path.
On October 11th, the market saw a huge shock with 10B plus liquidations globally, stablecoins depegged, and forced liquidations cascaded. Binance faced significant liquidity and public opinion pressure, initiating compensation and review. In response, HKEX stated that this is the growing pain of the industry after becoming institutionally driven, with the liquidity structure being reshaped and the industry still exploring its way forward. She emphasized that over the past 2 years, Binance has continuously improved its compliance, strengthened risk control, and enhanced communication with regulators and traditional finance. October 11th was more like a mirror, exposing the areas that both the industry and Binance must upgrade.
We feel that we want to serve more users, to take a middle path. We want to become like the Google of the blockchain world, able to serve ordinary people and make their lives better.
This conversation is a complete showcase of a multifaceted unity. He can use technical logic to convince you until you nod in agreement, and he can use educational philanthropy to move your heart. He can easily set aside the power of a CEO, but when it comes to building the future, his ambition never wavers. His line about the uncertainty of life being his charm may sound like a cliche, but in the crypto world, it's truly a fundamental truth. What's even more fascinating is that even if Changpeng Zhao is no longer in the co-pilot seat at Binance, he's still quietly stepping on the gas for the industry. And most importantly, our upcoming full conversation between Michael and HKEX is guaranteed to be even bolder, more authentic, and more revealing than anything you've seen so far. Be sure to stay tuned for the update. US initial jobless claims have dropped to their lowest level since September 2022. Normally, this would mean the economy is too strong and there's no chance of a rate cut. But the market's current attitude is very zen. Basically, as long as Americans aren't in trouble, everything is considered good news. As for Bitcoin, it's been steadily holding above $90,000 these past couple of days. It's neither dropping nor surging. The total crypto market cap fell by 1.76% to $3.14 trillion, and sentiment has also cooled off, returning to a wait-and-see mode. The real excitement isn't with BTC itself, but rather with Bitcoin ecosystem stocks. It's like the capital suddenly sobered up. Well, if BTC isn't moving, I might as well go speculate on the stocks next to it.
Tetherbacked 21, a Bitcoin company, approved for merger and listing on the New York Stock Exchange next week as XXI. Temporary CEP. Its stock surged 22% yesterday. The combination of a stablecoin giant and Bitcoin mining is heating up the market. Bitmine continues to increase its holdings of Ethereum, and its stock BMN2 rose nearly 8% to $36.32. Strategy fell 1%, but JP Morgan believes the previous decline already priced in the risk of index removal. It has rebounded nearly 20% from the early month low of $155, and holdings are becoming more stable.
Bitcoin is becoming a mainstream asset, and what's different this year is the participation of publicly listed companies. So MicroStrategy and its imitators, who are essentially the equity capital markets right now, are wide open to crypto strategies, and that's been the hottest part of the market.
To sum up the current situation, Bitcoin is just lying still above 90,000, but as a result, on-chain altcoins and Bitcoin concept stocks have all jumped out to steal the spotlight. After the panic sellers exited, capital started looking for something more exciting. And just at that moment, the market put on a show of low volume and pent-up energy, a classic move where the big players suppress volatility to build momentum. Even better, the expectations for a Fed rate cut are getting hotter and hotter, which is basically adding a safety cushion for risk assets. And so a classic scenario has emerged. Bitcoin is sitting tight, acting as the steady big brother, while DT is quietly getting ready to sprint on the side. As long as the market doesn't suddenly get hit with some major negative news, there's a real chance that funds could spill over from BTC's high-level sideways movement and flow straight into more volatile sectors. Anyone who understands can see the opportunity in this round of DAT's rebound window.
Here, there are legends of getting rich overnight, as well as carefully crafted scams. This is a dark forest developing in chaos, but it also nurtures the spark of hope that leads to the light. The ultimate destination of faith is freedom. The end point of consensus is equality. In this episode, TV will guide you through the fog, help you see the future, and together we'll gradually become wealthier.
Artists from 37 countries are creating Bitcoin history with MENA. In 2025, can crypto culture break into the mainstream? The leader holds 24% of ETH staking share, and Coinbase manages $300 billion in custodial assets. The reason why Bitcoin MENA 2025, which will debut on December 8th, can attract 12,000 people from around the world is that Abu Dhabi's real trump card lies in how solidly it has built the foundations of regulation and financial support over the years. This gives industry professionals a sense of security as soon as they arrive. Ali Khalid, the strategic director of co-organizer ADNEC, is also straightforward. The strength of regulation here is not about being restrictive, but about providing clear direction. As early as 2018, Abu Dhabi had already established the rules for digital assets. And what about Dubai? They went even bigger, introducing a regulatory sandbox that lets you experiment first and only draws the red lines once things are more developed. No wonder major players like Binance and Coinbase have all moved their bases here. Simply put, when the rules are clear and the attitude is friendly, capital is more than willing to flow in. And it just keeps increasing. Because of this, the commemorative conference attracted not only exchanges and institutions, but also a large number of industry thought leaders who attended in person. Among them, in-depth discussions included
the sharp correction was a bull market shakeout or a sign of a bear market emerging.
And what the outlook is.
Musk predicted fiat currency phased out and Bitcoin anchored to energy. Can it withstand the debt crisis?
Only time will tell. As some people said, one day every company will be a Bitcoin treasury company.
Michael Saylor's view that Bitcoin will be embraced by companies worldwide perfectly aligns with the main theme of the conference, and it also highlights another major feature of this year's event. In 2025, it's not just about money or regulation. This time, there's also a Bitcoin culture battle, putting everything from art and history to symbolic meaning on the table, showing you that Bitcoin is more than just an asset. It's already becoming a topic at the level of civilization itself.
Bitcoin MENA 2025 is placing culture, art, and education at its core, launching the first ever exhibition and auction on the history of Bitcoin. This book was completed over 4 years by 128 artists from 37 countries, totaling 256 pages, with its structure inspired by Saga 256.
Become Miner 2025 has turned the industry's sense of security into a complete experiential package. A $99 general admission ticket lets you explore the entire venue, watch the main stage, collect POWs, and enjoy interactive experiences with the app. The $899 professional ticket is like a fast track in your career, exclusive access to the business stage, programming classes, refreshments, and more. The $65,999 Goldfish ticket is practically an invitation for VIPs to take a seat in the exclusive lounge. The main stage offers prime seating with all-day drinks and gourmet food, plus an exclusive networking room just for the whales. The exhibits on site are just as impressive. A Dubai company is showcasing a BTC debit card you can use directly, and an Abu Dhabi bank is working to make the digital dirham interoperable with Bitcoin. What about next year? Cross-border business will run directly on-chain. They're not just watching the price charts, they're building a Bitcoin ecosystem that's usable, regulated, and a magnet for capital, all in one. If you want to experience it in person, scan the QR code at the top of the screen for a 10% discount. Just go for it. As soon as US regulators gave the green light to crypto staking, it was a boon for staking businesses, who immediately rushed into the traditional finance arena by embracing spot ETFs. In the past, retail investors who wanted to earn some ETF returns were always hampered by regulations. Now that the door has finally opened, new concerns have emerged. Centralization is becoming more and more obvious. Grayscale was the fastest to act. As soon as they launched their staking feature, they put over 70% of the $4.7 billion in ETH straight into staking. BlackRock wasn't about to be left behind either. They immediately submitted a staking application for Ashes. To put it plainly, this sector is just too attractive to ignore, so everyone's rushing in. As a result, the total size of Ethereum ETFs has soared to $18 billion, accounting for over 5% of ETH's market cap. The amount of ETH they hold is almost on par with Lido now. At this rate, it won't be long before the entire industry landscape has to be reshuffled.
And the familiarity of the Bitcoin ETF, I certainly think that when you look at an asset, an investment vehicle like GBTC, which is the largest in the world, it has, almost 1 million Americans who own GBTC.
The staking market is increasingly concentrating among the strongest players. Lido firmly holds the top spot with a 24% share of ETH staked. Its Steth offers deep liquidity and convenient redemption, and with only a 10% commission, it has become the primary choice for institutions. Their strategy is similar to how Vanguard once expanded its market share with low-cost funds, but their leading position is not unshakable. Coinbase holds only 6.3%, but it has an advantage in institutional custody. It custodies 81% of the crypto assets in the United States, and its ETF holdings have reached $300 billion, earning strong regulatory recognition. BlackRock holds a 7% stake in Coinbase. If its Ethereum ADF chooses to partner with Coinbase for staking, the competitive pressure on Lido will increase significantly.
The biggest issue with Ethereum right now isn't whether its price will fall, but whether all the power will end up concentrated in the hands of a single entity. With the POS mechanism, there are a few critical thresholds. Whoever crosses them first will see their influence on-chain skyrocket. And the rewards, the more you hold, the more you get, creating a classic winner-takes-all scenario. If Coinbase climbs to the top of the rankings fueled by ETF capital, that would basically be handing over the entire Ethereum remote control to a single centralized company. This is completely contrary to the original blockchain vision of decentralization changing the world. Honestly, the rise of staking ETFs is a good thing. It shows that traditional finance is finally taking crypto seriously. But right now, regulation is clearly lagging behind. Around the world, in many places, they haven't even clarified what staking actually is. Innovation needs to move forward and risks need to be managed. This is something everyone needs to sit down and discuss seriously. Otherwise, things could really go off track the faster we move.
Vice President Vance went online and openly criticized, saying that the European Commission wants to slap X with a several $100 million fine just because X wouldn't cooperate with their review. He complained that when it's time to support free speech, they don't, but instead they go after American companies. After seeing this, Musk immediately reposted it and even politely replied, "Thank you very much." Meanwhile, MicroStrategy has bought more Bitcoin yet again. Their official announcement directly revealed the numbers. They've already acquired 203,600 Bitcoins this year. They also casually added, "Keep moving forward," which basically means, in a very blunt way, we're going to keep buying, so don't try to stop us. Judge Oetken ordered OpenAI to hand over 20 million anonymous conversations as a prerequisite for submitting their materials, making it easier for the New York Times to investigate whether ChatGPT has learned too much from their content. The court also added a note about the scale of evidence collection. Just in time, VGB has officially launched on the Korean exchange platform Coinon, and both deposit and trading functions are now open. It is reported that ID and Coinon are listed among the 3 major core exchanges in South Korea. During this recent case cracked by the Jiayu police in Hubei, they unexpectedly stumbled upon a huge find. While inventorying items at the suspect's home and rented apartment, they discovered a virtual currency wallet containing 1.9 million USDT. While investigating a fraud case, they ended up uncovering a whole secret stash.
The real enemy in trading has never been the market itself, but impatience. The more you want to make money quickly, the more likely you are to get schooled by the market. For many people, it's not the strategy that fails them, but their inability to resist. Chasing highs, adding to positions, stopping out too early, or constantly watching the screen. I was the same way when I first entered the space. It always felt like everyone else was making money, and I was the only one stuck in place. But the harshest truth in the crypto world is that moving slowly is actually a skill. When you stop acting impulsively and start making decisions systematically, using data instead of emotions, you'll suddenly realize that volatility is no longer a killer move, but a great opportunity. Now, my trading logic boils down to just 3 sentences. First, identify the overall direction. Never go against the trend. Second, your position size should be lighter than your emotions. If your heart races, reduce position. Third, once you have a strategy, stick to it, don't improvise. Remember, the lighter your position, the more accurate your judgment. The slower your pace, the steadier your profits. That's the content of the episode. Our channel focuses on news summaries in crypto, DeFi, and mining. We provide news updates and reports. If you find our channel valuable, share and follow, become a member and receive our members-only wealth codes. Let's add another 0 to our members' portfolios in this bull market. See you tomorrow.